You probably hear the same thing all the time that renting is throwing your money away, buying a home is the smart move, and owning your home is a way and the only way to build wealth, especially from some of your older family members. But here's the problem that advice was true in a specific economy at a specific interest rate, and things are different now, and it's not a law of nature, it's only math. And of course, when the variables change, so do the rules. So today we're actually going to run the numbers, no crazy assumptions, and it'll be real to today's environment and figure out when renting would win for you, when buying wins, and how to tell which situation that you're currently in. So let's start with the phrase that convinces the most people to buy a house better than any other, and that's that rent is dead money or that you're just throwing money away. But there's a flaw in that logic. When you rent, you're paying for a service. You can think of it that way. Shelter for a month at a fixed and known cost. When you own, you're not actually paying nothing. You're paying mortgage, interest, property tax, insurance, maintenance, and closing costs. A huge share of that money is money that you'll likely never see again. You're not necessarily investing it into your home. So, in the first years of a typical 30-year mortgage, a lot of the interest is front loaded. So, most of your monthly payment isn't even paying down the loan, it's almost entirely interest. Say, for example, $400,000 mortgage at a 7% interest rate. Over 2,300 of that payment could potentially go straight to interest, with only a few $100s actually building equity into your home. So the real comparison isn't necessarily rent is waste and buy is wealth. It's which option leaves you with more money and flexibility now, 10 years from now, 20 years from now, etc. So renting usually has one number, the rent, right? But buying has at least five distinct categories that I can think of. So first of all, it'd be the down payment. Even if you put a 10% down payment, that's tens of thousands of dollars likely with an average home price, even a lower priced home. And that's being pulled out of, say, the stock market or some other form of investment where it could have been growing and more easily accessible, but now it's locked into your home until you sell or some other means. Next, closing costs. So that's usually about another 2 to 5% of the purchase price. And that is just gone the moment you sign. So that would be on top of your down payment. Third is maintenance. This can be huge depending on the state of your home and how often things break in your home. And it's not necessarily something you can predict or control. And that's usually about 1 to 2% of the home's value every single year. So if we use our $400,000 home that we were referencing earlier, that's about $4,000 to $8,000 annually. That's not necessarily included on your monthly payment. And then fourth is property taxes and insurance. So these will actually rise over time, likely. And in some states, it can add hundreds of dollars a month with that increase. And then lastly, the cost of selling. So eventually you might want to sell your home, right? And kind of realize these gains of your home appreciating and you paying down the mortgage. However, real estate commissions and fees can eat instantly 6 to 10% of the sale price. And of course, that will eat into the profits of selling your home. So overall, none of this necessarily means that buying is bad. It just means the sticker price isn't the real cost of owning a home. Okay, so now I've just confused you and made you more unclear on whether you'd like to rent or buy a home and what makes the most financial sense for you. But if you want a simple shortcut that will kind of cut through that and give you some sort of general direction, you could take the price of a home and divide it by the annual rent for a comparable property. So if that value is under 15, buying is more financially attractive and it seems to make the most sense more often than not. If that value is between 15 and 20, it's close and more of a toss up. Personal factors, say how often you want to move or other things, start to matter more and make more of an impact on that decision. And then above 20, renting is more financially worthwhile there and it makes the most financial sense. So in many major cities right now, that ratio is well above 20. And that's more a reflection of home prices rising faster than rent in those markets. However, in smaller or more affordable metro areas, the ratio can be well under 15 and buying wins clearly there. So overall, the takeaway isn't necessarily that there's a universal answer to rent versus buy. It's a local one. And you'd have to check this in your own city instead of just blindly guessing whether you'd like to buy a home or not. Now, there's another thing we have to factor in, and almost nobody considers it. So, say renting costs you $500 less per month than owning the same place. Once you account for the mortgage, taxes, insurance, and maintenance, if you take that 500 and the down payment you didn't spend and invest both in a simple index fund, averaging, say, the historical stock market returns, that gap can be serious over 10 or 20 years, sometimes rivaling or exceeding the equity a homeowner might build. This is opportunity cost, and specifically opportunity cost of home ownership. And it's one of the most overlooked factors in the rent versus buy debate. Buying a home isn't just picking an asset, it's choosing not to invest that money somewhere else. But that doesn't necessarily mean that renting always wins this trade. Leveraged real estate can outperform too, especially with a low interest rate locked in for 30 years. The point is, the comparison isn't rent versus buy, it's renting and investing the difference versus buying and building equity. And both of these are investment strategies. Only one gets marketed as one, however. Now, there's another thing we have to factor in, and almost nobody considers it. So, say renting costs you $500 less per month than owning the same place. Once you account for the mortgage, taxes, insurance, and maintenance, if you take that 500 and the down payment you didn't spend and invest both in a simple index fund, averaging, say, the historical stock market returns, that gap can be serious over 10 or 20 years, sometimes rivaling or exceeding the equity a homeowner might build. This is opportunity cost, and specifically opportunity cost of home ownership. And it's one of the most overlooked factors in the rent versus buy debate. Buying a home isn't just picking an asset, it's choosing not to invest that money somewhere else. But that doesn't necessarily mean that renting always wins this trade. Leveraged real estate can outperform too, especially with a low interest rate locked in for 30 years. The point is, the comparison isn't rent versus buy, it's renting and investing the difference versus buying and building equity. And both of these are investment strategies. Only one gets marketed as one, however. But it isn't all math and money. Real life will tip the scale. Take time horizon, for example. So buying only starts to beat renting after you factor in years of appreciation and paying down the loan. Often about 5 to 7 years, sometimes longer if you include transaction costs. So if you might move in 3 years for a job, buying can actually lose money even in a rising market. Flexibility is another factor. A lease ends, a mortgage doesn't necessarily. Renting gives you the option to relocate for a better job, a life change, or simply a market downturn without needing to find a buyer first. And then stability. Buying locks in your monthly housing cost against inflation and rent increases. This is a real, non-financial kind of security that isn't fully captured. And then maintenance responsibility. So renting means a broken water heater is just a phone call to your landlord. But owning means it's a bill to you, a task, a decision. It's all on you. So neither of these lists are better. They're trade-offs, and only you know which side of each one matters more in your life right now. All right. Enough of my rambling. How do you actually decide? And first, you're going to want to calculate that price to rent ratio, and that'll point you roughly in the direction that is more financially attractive. Then you need to estimate your true monthly cost of owning. So the mortgage, taxes, insurance, and 1 to 2% for maintenance, not just the mortgage payment up front. And then compare that to a similar rental. and ask yourself, what would you actually do with the difference if you invested it instead? And then your time horizon. So are you planning to stay there for, say, 5 years? Are you only going to stay there for 3 or 4? Or are you going to stay there for 30 years? And then be honest with yourself about flexibility versus stability. Which one do you actually need or want more now? So, moral of the story is that there's no universal right answer, and anyone that is telling you that there's a universal right answer is likely selling something, whether that's a house or some sort of course or something. But the right answer is when you actually run your own numbers in your own city for your own timeline for yourself instead of just repeating everything your grandpa tells you all the time. I appreciate you sitting through my rambling and checking out my video. I'd appreciate if you check out some other videos that I have or consider subscribing. Thank you for watching.